Hi guys, this presentation is going to show accounting and tax treatment for a contract that's inside the scope of IR35. Who is this video for? Well, basically this video is for anyone who's affected or at risk of IR35. Anyone who already understands what IR35 is, what it takes to be in or outside the scope of that, and anyone basically who wants to understand what happens when your contract is inside the scope of IR35. How do you go about accounting for this? So, what's the big idea with the new IR35 reform coming out in April 2020? What it's saying is that we're the medium or large organization that engages an off payroll worker, which is like the director of the company, that organization will now be responsible for determining whether or not the IR35 rule should apply. And if so, they're also responsible for paying the right tax and NI contributions to HMRC. This decision was the limited companies before, but after April or from April 2020, the decision now will be passed on to the organization, the medium or large organization. What does this mean? What does this mean for your limited company? Well, it means that the client, which is your medium and large organization, or even the agency, will now be treated as your employer for the purposes of tax and NI. They will be liable for secondary class national insurance, and they must deduct tax and NI from the payment they make to you. So, which means that the payment that they make on your invoices will be net of income tax. That medium or large organization or even the agency will be obliged to remit payments to HMRC, and they have to do RTI submissions. Now, let's put this into perspective. Let's say your company XYZ Limited um, gets a contract or agrees a contract with ABC Corporation. They are a medium and large organization or even an agency, and you are the director. The director is Robin Banks. Let's say Robin Banks does some work for ABC Corporation. Under IR35, ABC Corporation will be seen as the employer, and Robin Banks, who's the director of XYZ Limited, will be seen as the employee. ABC Corporation will be responsible for NI and PAYE, and they are the decision maker in terms of whether or not the contract falls inside or outside the scope of IR35. So let's discuss the accounting treatment for this. The main issue is whether or not to show the income in the accounts of the limited company as net or as gross of income tax. HMRC will accept both. They appear to support, however, the turnover being produced in the accounts as net of deductions and not gross, based on the examples that they have on their website. However, many accountants, including ACCM members, do not agree with this approach. In our opinion, financial statements that do not show the full income as invoiced would not give a true and fair view. So for this reason, our example will be shown gross before tax deductions. We believe this is a more appropriate treatment. So let's put what we just discussed in an example. Let's say Robin Banks, working through his own limited company, XYZ Limited, invoices ABC Corporation 18,000 plus VAT for his services. How is that treated in the accounts of XYZ Limited? The first thing he needs to record is sales of 18,000 as normal. 18,000. The VAT now goes to his VAT account. He still has to do a VAT return. Trade debtor now becomes 21,600 in the books. However, ABC Corporation is only going to pay 17,600. That's because they're paying their invoice net of PAYE and national insurance contributions. We're just taking an example that that tax amount sums up to 4,000. That figure will now be credited to the debtor's account. So therefore, the trade debtor amount is reduced by the 17,600. That will leave a balance of 4,000. How do we treat the 4,000 deduction? The treatment of the 4,000 deduction made at source by ABC Corporation has to go through the books of XYZ Limited. Robin Banks will have to record in his account 18,000 for director's remuneration or salary. And on the balance sheet, he needs to reduce the trade debtor by the balancing amount of 4,000. The remaining can go to director's loan account as a credit or go to bank if you're going to pay yourself right away. So that is basically the treatment. So here are some of the things to consider when agreeing or before you agree a contract under IR35. The fee payer will be responsible now for secondary class 1 national insurance. That is the employer's contribution that they have to make. All of a sudden, they have this extra tax liability because of the contract. So they're in a position to renegotiate a fee, renegotiate a lower fee, with their argument being that they have to pay more tax. You'll need to be aware that as a director, you have a primary employment with your own company. So any service you provide to the medium or large organization is treated as secondary employment. You will not need to give them a P45 from your previous employment. And the only thing you'd have to do is to sign a starter declaration C. You can always look that up on HMRC to see what that means. They will ask you to sign that form to pass on to HMRC. The next thing to think about is VAT. As a limited company, you will still have to invoice or issue a VAT invoice, and you will still have to do your VAT tax return. For corporation tax, there should be a nil effect. Make sure that is the case when you put in salary. The salary amount that you put through the P&L should be the same as the sales amount you put in the P&L for that contract. So therefore, there should be a nil effect and no corporation tax gain or loss should be gained from this. Self-assessment. You need to put the amount that you receive from this contract on your self-assessment. But please be careful that you do not get double taxed. You have to put the amount that was taxed on your self-assessment. The other thing is PAYE RTS submissions. Unfortunately, this one got me by surprise. The company, the limited company obligation to report tax employment in are largely the same. It's the same. You still have to do a full payment submission. But the one that you do, you have to say that it's non-taxable income. And the next thing is you need to be aware that if you undertake a contract, this only applies to medium and large organization. It doesn't apply to small company. So it's safe to say that there's a lot to think about. should you undertake an IR35 contract inside the scope of IR35. Not only you're treated as an employee, but you would still have to undertake additional admin and carry out complex accounting treatment to properly account for this. I mean, the whole process is prone to error, in my opinion. You can see where it is easy to make mistakes on your self assessment or even on your financial statements. So, it is advised to speak to an accountant. Me. Otherwise, and if possible, work with your client, work with the medium and large size organization to see if they can change the terms of your contract and the way in which you work to ensure that this contract is outside the scope of IR35. If you've made it this far in my presentation video, I'd like to say thank you for listening or for watching. If you have any questions regarding IR35 or how to account for this in your limited company, I'm more than happy to help. The presentation was basically my take with the help of ECC, how to account for contracts inside the scope of IR35. Because I find that there's a lot of people that wants to understand what's the worst case scenario should you have to take a contract that's inside the scope of IR35. Not every company has the ability or the budget to hire somebody as as an employee, a full-time employee. But if you have to take on that contract and the medium or large organization says it needs to be within the scope of IR35, I hope that this presentation helps and to give you a better clarification of how it can be treated.